Hey, Jamie and Steve, what's going on?
Hey, Scott. Hey, Steve. How's it going over there?
There we go. Double mute. It's going.
I was
Thank you,
like, oh
Jamie.
no, is it me or you? All right, everybody's here and everybody's seeing. Okay, good. What is happening, Steve? I guess before we get rolling here, I just want to take the opportunity to welcome everybody and say thank you for spending some of your valuable time popping in to hear what we have to say here today. Of course, if you're a test driver, welcome. I'm going to try to save a few minutes at the end. Judging by the number of attendees, it probably looks like we do have some additional people in here that might be in the test drive, so we'll try to maybe save 10 minutes for a little Q&A at the end here, time permitting. So here we are in February, the first office hours of February. January is in the books, and man, time flies. So without further ado, let me just get the legal speak over and done with here. Make the attorneys sleep a little lighter in the evenings. Just want to make sure that everybody in attendance is aware of the fact that all the information that we share in this webinar or any of the other webinars that we host throughout the week is for educational purposes only. If you do need investment advice, what to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker that can legally help you with such advice. Okay, now since there are probably quite a few new people in the room here, for you regular attendees, just bear with us here. Want to make everybody aware of the community that we have constructed around the award-winning technology that is Trade Ideas. So where does it all begin? We all start with the Traders Room. Barry Anderson is the moderator of our trading room. Any given day, 400 or more people in there. If you've shopped around for trading rooms, you know that most of them that are worth their salt certainly have a fee attached to them. But one of the benefits of being part of the TI community is our room has zero fees, all right? It's free to use. So you'll notice if you get in there and spend some time, it gives the paid rooms a fair shake for their money. Barry opens the room 30 minutes before each trading session begins. Does a great job at not only showcasing how he uses the technology, but helps people by showing them his trading style as well. Of course, today's Monday. You get myself and Steve. Steve's going to take the reins tomorrow. Tuesdays is the trade of the week. Andy Linloff's going to ride shotgun with him. Wednesday, hump day rolls around. We like to change it up just a little bit. That's when you get the CEO, Dan Merkin, and our Chief Technical Officer, Brad Williams, in there doing their thing, always entertaining. For the 5 o'clock webinars, Andy's going to round it out on Thursdays with the Trading Studio, and I ride shotgun with him. Now, on Fridays, we like to change it up a little bit. Doing something that's a big hit thus far. Crowd keeps continuing to grow in the Friday support sessions. So Fridays we start at 11 a.m. Eastern and we go until 2 p.m. So we allocate 3 hours for the Friday support session. You can come in there with anything TI related. So if you haven't been taking advantage of the Friday support session, by all means, mark it on your calendar, start getting in there. Now, in addition to our 5 o'clock Easterns, all right, with the exception of Friday, which is the support webinar, we have also incorporated, not too long ago, TI University. For those of you who are just starting out, maybe you're okay with beginner, but you need some advanced coursework, fear not, because we've got it all covered. Starting on Mondays, Beginner 101, and by the way, all of these start at 12 p.m. Eastern Time, so adjust accordingly for your time zone. Mondays is Beginner 401, Tuesdays 201, Intermediate, on Wednesdays 301, and then the part that I teach, which is Thursday 401. So now we do recommend that you take these in order because you'll need what's presented in 101 for 201, so forth and so on. So a great place to get familiar with the software, learn all the basic ins and outs. We also have these recorded on our YouTube channel as well. If you can't make it during the actual programming event, well then next best thing is to go watch the archives on our Trade Ideas YouTube channel. recently updated our account subscription growth based on the introduction of our AI modules. As you can see, beginning of 2016 is when we first introduced the first AI module, just known as regular old Holly. Since that point in time, we have tacked on 2 more modules, Holly 2.0 and Holly Neo, and it appears that people are responding well to this because our subscriber growth is doing pretty good. And 2019 is not present yet, but I'm assuming it's going to keep up with the curve here. So very exciting. A lot of enhancements coming down the pipeline for the AI, as well as automated AI order entry, which is targeted hopefully by the end of Q1, in case anybody out there is wondering. All right, that gets us through all the informational stuff. So now let's just get it right into the meat for today. In keeping with tradition, I'm going to let Steve take the reins here, talk about the overall market. And if you're ready, Steve, I'll just kick it on over to you.
I'm ready. I think I was maybe sloppy on the mute button earlier because the nice go-to webinar lady told me I was muted. I think that's what happens when you do it.
Yeah. Just keeping the atmosphere conducive.
Let's see. I'm trying to make sure I've got the right sharing. There we go. All right. You see my screen?
I certainly do.
Perfect. Excellent. All right. So hello, everybody. Thank you for that, Jamie. So in keeping with tradition, like Jamie likes to say, I'd like to start off with the S&P 500 ETF, known as the SPY, SPY. And technically, all we really have to go on is the path of least resistance continues to be up. It's been riding this 10-period average really nicely, as I so often try to talk about and keep simple at the same time. But we're running right smack into the flatlining 200-day moving average. So this is coming up, and I think we're close enough to where we're in the neighborhood. We're going to have to check it out and ring the doorbell on the 200-day moving average and see what happens. And there's 2 scenarios. We can get above and close some nice candles above, and then, wow, I might be logging back into my 401k and getting out of a lot of bonds and maybe back in stocks. We'll see. Or the other opportunity, the other possibility is that we trade through, but then at the end of the day, it fails and we get something like a big rejection wick. That's not what the bulls are going to want to see. So I think it's coming. Let's just wait and see what happens as we get to the 200-day. That's certainly what's sticking out most to me. Wouldn't even be surprised to see, the energy that we've spent the last few days here, declining energy, not a lot of oomph behind it. We could very well, consolidate and continue to come back and consolidate for a second possible bounce off of or another possible bounce off that rising 10 period to get a good running start at the 200. So I think that's going to happen, maybe materialize this week. We'll see. But in my world, this has been the last of the hurdles that the SPY has had to overcome since the oversold volatile bounce down here, where we were briefly in bear market territory for a day and a half. But since then, the volume has kind of subsided, the volatility has subsided, and this 10-period moving average has been the guiding force that keeps the price action in play. So we're going to run right into that 200-day, and that's really all I see on the S&P 500 now. NASDAQ, we'll take a look at the Qs. Pretty similar in fashion, a little bit more sloppy back here in the moving average. Not as clean as the S&P was, but still the same thing. We've got a little space here between the 200-day moving average and today's closing price. So the same thing holds again. How can we close? If we can close above and stay above without throwing in some sort of an intraday reversal where we go through and then we have a rejection. So again, the bulls don't want to see anything that looks like that right there. Moving along to the less important IWM, Russell 2000, interestingly enough, is way below, got deeply oversold, and so it still has a lot of work to do here before it gets to its respective 200-day moving average, which is also flattening. It's interesting that they're all kind of flat at the same time. Some people like to look at the trajectory. Is it sloping up or sloping down, or is it sloping flat? A flat 200, when price action gets to a flat 200-day moving average, that happened, I think, in the last 3 years, and it was extremely boring. by the way. I'll have to go back and look at that at some point. But there was a period where we were right there at the 200-day, and it was a flat 200-day, and it was just extremely boring action. Lastly, the Dow, interestingly enough, is showing us a little precursor, hopefully, as to what the bulls would want to see. Now, you notice here's its respective 200-day moving average, flatlining, but here's 3 or 4 days of closes right above the 200. So this is what we are going to need to get in confirmation on the other 3 ETFs that we just looked at to kind of brush aside the market is in correction mode. Because it's no longer in bear market territory, that's for sure. I'm still trying to work off the correction that it had. But this is a possible precursor as to what the rest of the market needs to see. This is the Dow. It's just a small group of old industrials. So we're going to need to see a lot of confirmation with the other factors of the S&P and the tech-laden NASDAQ. What else before I turn it back? There was a little bit of interest in, well, let's see, last week's trade of the week, which I'll talk about tomorrow in my webinar. Nice looking breakout there, would you say so, Jamie, on the daily chart in SNV? Finally getting a nice move.
I would.
And so with that lead in, thank you, Jamie. What happens when a stock is having its day, when a stock is having its move? I like to use the old 10-period moving average to make sure that things stay in line. And what do you know? There it is again, as simple as can be. Great example of the morning opening thrust getting ahead of the simple moving average, and then the perfect sideways action, and then for the rest of the day. Now, this doesn't happen always. It doesn't happen in these ranges back here when things are just, all contangled. But when we break out of a nice wedge and a stock is having its day in a clean fashion on the daily chart, this is what you would expect to want to see on the intraday chart, a nice clean following of the 10-day moving average. What else was interesting of note? I think Occidental Petroleum is still looking really good as a trade of the week. And then this week was an ETF, Interactive Brokers. Oh, had a really interesting close. I didn't even catch that candle on the close. It didn't trigger yet. It's going to possibly trigger tomorrow at about 110.70, I think was roughly. So there's the trade of the week for tomorrow, guys. Interesting to note, as we talked about a lot of moving averages and their respective ETFs that were at them. This is the 4th time, 1, 2, let me get rid of that orange line again. 1, 2, 3, technically range, the 4th period of events that this price action is banging on the underside of this 200-day moving average. I really feel like it's going to make it through. I think this could be a leading ETF sector, so I fully expect it to actually trigger and go live tomorrow. And so there's an update on that one. It very well could even gap up if things happen overnight. But the nice thing about trading the IBB is that, if you're going to trade swing trading, obviously the biggest overnight risk is overnight risk, news, earnings warnings, bad news, especially in biotech stocks. It's very, very difficult to expect to be able to hold biotech stocks overnight and not get smacked once in a while with some bad FDA news or something along those lines of the product in their pipeline failing miserably and the entire business model falling. That's never fun to wake up to. So the ETF gives you nice mitigated risk exposure if you want to play in the biotech land, and IBB is the biggest one. So that's the sector behind it, and I just feel like it's about ready to have a good move. And one more thing before I leave, I was looking at some sectors before I give it back to Jamie, and of all the sectors that were decent today, this one really looks the most interesting. It's the oil services sector, which would also still bode well for Occidental Petroleum, the one from 2 weeks ago, trade of the week. So a lot of the trade of the week's looking good. They're mirroring the regular market, but the OIH as a sector, again, another sector ETF, just like we looked at the biotech, this one's going to be for the oil services industry. It just has that look, like a bird in the hand that's ready to fly. Definitely different than the looks it was giving back here. As it was trying to consolidate, it was still below all of its average. Well, now it's done a lot of constructive work, and it just looks like it's getting ready to maybe move. So keep an eye on that sector tomorrow, the OIHs. And that's really all I got, Jamie.
Good stuff, Steve, as always. All right, let me kick it back over here. And just let me know when you can see.
I got it.
Back on? Okay, very good. Welcome back to my desktop, ladies and gents. So what are we going to talk about first here? Well, course, since nobody has a crystal ball that actually works, you might have one, but that doesn't mean it works, right? Let's talk a little bit about expectations today, because I got a little bit of cross signals, mixed signals, as you can see here. One of the things I like to try and keep track of are my compare count windows to try to give me a little peek, possible peek into the future. Now, if you're brand new, you might not know what a compare count window is. And if I can get my screen situated here, hold on. GoTo's not being nice to me. Give me 1 second. Compare count readings, all right? These were my compare count readings after the first 15 minutes. And now for some potentially new people out there that might not know what in the world they're seeing here, a compare count window is easily accessible as one of our windows from the TI toolbar. And you can see you can spawn a brand new one right here. These little guys were built to help people keep count of things. Now, whatever it is you want to try to keep count of is up to you, but this was an original idea that was spawned from an old school metric that's been around the big board for eons called the tick, right? Just keeping a ratio of any stock hitting high or low, advancers versus decliners, and it establishes a ratio. So what we did is we invented the compare count windows in order to help people create ticks for whatever specific events they would like to keep track of. Now, my big cap movers is just that. It's looking for stocks that are hitting highs and lows just in the regular session as soon as the market opens, with considerable market caps in excess of $4 billion, right? So I'm trying to keep tabs on what those stocks are doing in the opening 15 minutes, with the additional caveat of they have to be doing extremely high 1 minute volume. The theory that I have is that can give me sometimes, but not all of the time, a little peek into the overall direction of the market. Now, it's just like any other study or, indicator that's out there. We like certain ones. Some people like ones and not others. But the bottom line is they're not always accurate, right? There's nothing that we can just look to that works all the time. So the way I view this information, and you can see the 56% red reading after the first 15 minutes is when that screenshot was snapped today. So what does that tell me? That tells me there's a lot more selling in those big name stocks with accelerated volume in the first 15 minutes than there is buying, all right? Not the biggest bias, but a red bias nonetheless. Now, I also pay attention to our AI. And when we look at the Holly blotters, and I've got each individual segment and all of the trades opened up here, starting with Holly 1.0 at the top, Holly 2.0 here, and then the guy that was the most active, needless to say, was the Neo module. Now, I got red, indicators in the first 15 minutes, but look what Holly was doing, establishing what we would call a long bias. A few shorts sprinkled here and there. One, what do we have, 2 for the whole day? Oh, 4, yeah. 4 shorts out of 21, 28, 32 trades. So obviously a significant long bias here. So a lot of the times when I get mixed signals like that, well, what does that tell me? It just tells me probably not going to trend huge one way or the other. There's going to be some nice shorts. There's going to be some nice longs. But I wouldn't look for today to be a big follow-through day. Now, look at how the Holly modules all finished over here. 62 cents, 70 cents, $1.30, maybe up 2 points gross on quite a few trades. All right. So once again, after everything's said and done, Holly reaffirming that, meaning there were good opportunities, but a lot of the times on these, if you didn't take the money before you could even blink an eyelash or wait 15 minutes, you might have been back to flat today. So that's how I kind of laid out my expectations today. Nothing big one way or the other as far as a continuation, but some good opportunity. And we're going to talk about some of the stocks that came across some of my more bread and butter type tickers, which on a day like today is really what you have to fall back on and wait for the pristine setups. So we had mixed signals from the CCs, Holly throwing out, just exactly opposite of what the CCs were telling us. Now let's talk about how Holly did. And we can see up here how she finished. These modules right here were flopping back and forth between risk off and risk on most of the day. In the end, it looks like risk on played out to be the winner on all the modules. So what we typically like to do during this webinar is talk about how to capture some of the risk on, risk off spread that Holly's presenting. So keep in mind, we got risk off over here. We have risk on over here in each one of the modules. So we're going to go back and forth and take a look at the spreads that were available here. But before we go on to do that, I do want to take a couple of minutes here to explain what risk off is versus risk on for people that might be hearing this for the very first time that are test drivers. So risk off. Risk off is Holly simply obeying her rule set. You know, if I pull the strategies panel over here and we do take a look at Neo's strategy panel, we can see all the strategies that made the cut. We can see based on the back testing and optimization what each strategy win percentage was coming into the session. This was expected and this was actual performance today. So it's very possible for a strategy to overperform like we're seeing Mighty Mouse did today. The lower dollar stocks seem to get a little traction. Came into the day at 59.2% and performed at 66.7%, hitting 2 out of 3. Of course, it's also possible for a strategy to underperform, which is what we're seeing with these guys down here. They all spit out one trade and did not win, so that's why we're seeing zeros down here for today's win percentage. Now, when we're talking about risk off and risk on, let's just recap what Holly's doing in risk off, playing by the rules like me, you, any other sane trader would do. If we do enter into a trade, we have to protect our downside in case we're wrong and it doesn't do what we think it's going to do, right? A little common sense there. So we're using stop losses. Holly's also using sometimes profit targets and timed holds. You can see right here what each strategy was devised around as far as hold time. This one goes until 15 minutes before the close, 60 minutes here, 2 hours here, 30 minutes here. Pretty much the whole gambit of hold times that we see in Holly modules. So we got profit target, stop loss, and timed hold. Now, those are the three main ones. But if we focus on this exit reason right here, during the regular session, if this field is empty, the trade is still open. But anytime Holly closes a trade out on risk off, she's going to list the reason here. All right. Here we can see the timed exits. These guys went the whole time duration, and Holly plugs out of them at that designated time, just like she's programmed to do. We can see a few stop hits today. Stop out right there. Not really seeing any profit target hits today. Let me see if I'm just missing one. I think I would have remembered that. But no profit target hit today. Another stop down there at the bottom. But then we also have profit save and reduce risk. Two other reasons why Holly can get out of a trade prematurely. So if she gets out of a winner prematurely, it's profit save. If she decides to cut a loser prematurely, reduce risk. Now, why did we give her the ability to get out of a winner or a loser earlier? Simply because we don't want a winning trade turning into a losing trade over time. So think about that for a second. If we just had profit target, stop loss, and timed hold, none of those could have triggered. Stock might be up 50 cents. By the time the timed hold comes around, might be back to flat or even losing a nickel, right? So that's why we've given her two audibles to call profit save and reduce risk. So now let's take a look at an example of going risk on with Holly when she's getting out risk off. And we're going to take a look at this little guy first. UEPS came from Mighty Mouse, a low price stock. Holly called it at $2.98. But we can see here by the end of the day, it was one of the biggest winners from a percentage basis. And why did Holly get out? Well, Mighty Mouse was the strategy. And we can see right here, Mighty Mouse is designed around a 60-minute hold time. So stayed in it, profit target, stop loss did not get hit. But by the time that timed hold triggered, and we can see Holly's entry right here, This shaded area also represents Holly's time in the trade in risk-off mode. So somewhere right around here is where she closed it out based on her time stop, booked an 8-cent profit, okay? So we could just put an arrow here and just say this is the general area where Holly got out right here, corresponding with the shaded area. But then look what happened afterwards. So whether you're going to end up staying in a trade when Holly's getting out all depends on if you like what's going on the intraday and sometimes the daily chart, right? On this one, we just got immediate lift. Boom, boom, boom. And these are 15-minute candles. So for the next hour, we just went straight up. So a lot of the times, hey, things are working. You take a look at this, you see Holly closing the trade out. You've got options here. If you like what's going on, you can stay in the trade and say, that is you going risk on. You're like, I acknowledge Holly getting out in conservative mode. I think there might be a little bit more meat left on this bone. So I'm going to stay in. I'm going to take more risk. And on this one, you would have been handsomely rewarded to the tune of about 24 additional cents. So you had potential of 3 times what Holly made in risk off by just saying, okay, I'm going to keep it. I'm going to hold it. Now, how are you going to handle it once you decide to keep it? Everybody's a little bit different. Maybe you set your stop to break even. So the worst case scenario, it does fold over and you give up that 8 cents. You're not going in the hole additionally. Now, in this example right here, whether you stayed with your original stop or once you decided to go risk on and tightened your stop up to break even, never even tempted it. Also, too, one thing to point out, just as Steve was illustrating earlier when he was looking at the indices, this green line right here is the 10-period SMA. These are 15-minute candles. Notice how, as Steve was pointing out, when things are in motion, acting as that guiding hand. So if you don't have the 10-period SMA up there, might not hurt to get it up there. It can help you a lot when you're deciding to go risk off or risk on with Holly. So that was the biggest one that I saw here today. Not huge dollar amounts, but on a percentage basis, because that was basically it's just called a $3 stock. Some very impressive numbers there. Now, as far as everything else, not seeing, due to the nature of the day, not a whole lot of continuation. 79 cents versus 94 here on a $50 stock. Nothing to write home about there. We do have a couple of additional examples from 2.0 that we could take a look at here. AXSM, not near as well behaved as the UEPS trade, but we can see here, risk off, Holly, oops, that's the wrong one. We'll look at both of these guys, but we'll take a look at AXSM first. This one would have been a little bit more harrowing to stay in if you're using that break-even stop. So we can see right here, Holly gets a nice entry, nice lift immediately, pulls back from the top. Holly gets out somewhere around here, corresponding with the shaded area, books her 25-cent profit. Now, if we would have played the same game here, we said, okay, we like what's going on so far. We're taking a little pullback, but I like what's happening here. If we would have adjusted our stop loss to break even, would have been a close call there. Now, depending on who you are, all right, when I'm seeing these break-even stops, and typically just stops in general, from the hard line, me and a lot of other people will take it down 2, 3, anywhere from 2 to 5 cents below that level, just in case we have these little close calls right here. So, you know, if you're a stickler and stick to it, maybe you got stopped out, you put this maybe a penny or two below that line, you probably had a good chance of staying in it. A little downturn back to the entry line, but then before the day was out, finishing higher. So not quite, or just a little bit over 2x factor there from taking more risk on AXSM versus just plugging out with Holly. Now let's take a look at this little guy. He was a lot of things I like about this chart on PYX today. I'll just draw a line across from that initial high in the opening 15 minutes. Now we can see right here when Holly made the call. Now, number one, PYX, couple nice things I like about this entry. Number one, it came from float on today. And if we take a peek at float on, came into the session at 65.5% probability. All right, that's what we have going for us right off the bat. Now, couple that with what we're seeing at this entry line here. Now, why this stands out to me so much is because I love playing these range breaks. This is a pretty conducive range break. We don't have a lot of flux in here. We get a lot tighter range moving up to this level. Holly calls the signal right here. So we got statistical probability on our side. That's great. But I'm also noticing, hey, we're just a little bit away. I was going to say a few cents. Yeah, a few cents away from this also turning into an opening range break, right? Which is one of the more simple patterns. So we get the call with Holly right here, points me to this stock. I see it's about to penetrate that line right there. So I can play this a couple different ways. I can just take what Holly, take the signal from Holly and sit with it, or I can take the signal with Holly, give it a few shares right here in anticipation, and then once this line is broken, and we can also see that this is the highest volume bar of the day. So we've got an auxiliary pattern forming on top of a Holly signal. So, getting into 100 shares here, maybe doubling up as soon as this line is cracked, off to the races, a nice opportunity to really leverage this position. Now, what were some of the bonus items that came along with this play? Other than, hey, it's about to exhibit, it could exhibit this breakout, maybe I'll bolster the position. But look how this guy finished volume-wise today. And the volume was strong all day, picking up right at the most crucial time right here. Kind of lackluster through here, which isn't surprising. But then we have huge volume kicking in as the break occurred. And, oh, look, here's our friend, the green line, the 10-period SMA, doing its job as well. So a lot of good things happening on this PYX trade. So once you get familiar with seeing how Holly operates and really, taking a gander at some of these setups and, has the pattern that you like coupled itself with the statistically probable entry, right? Doesn't happen all the time, but through, sitting in the chair and watching the statistical model day in, day out, it will start to happen. It just depends on how much time you allocate to the process, right? So PYX, probably my favorite trade of the day based on the factors that we've just talked about here. All right, looks like the questions panel is relatively tame here, so we'll just cruise on here. Let's see, I think we got a couple more up here in the Holly 1.0, same old song and dance. Now this one, a little bit more frantic before the stop did not get hit here on UNIT. So, it's good to see what happens. The other ones that we looked at just had nice lifts up to the downside, but hey, sometimes this is going to happen. And on this guy, boy, came really close to a stop out, but did not occur. And then what do we have? We have a gravitation back up to the entry signal. And sometimes they're going to hug this line a lot of, right after the entry. Sometimes they're going to go up and come back down to it. Sometimes they're almost going to stop us out and snap back up to it. And of course, sometimes you're going to have stop outs that never even get back up there because they're the ones that just keep going for the day. But what I'll say about this unit trade is when you see Holly almost get stopped out, let's say this 15-minute bar had closed, you pulled it up, you're like, wow, that got pretty close, but it didn't catch. And we see this bottoming wick right here. That's a good sign. It means the sellers took control, but they couldn't maintain control. Most of the volume was done up here in the candle body, but it did have this nice little excursion down there close to the stop out. So, playing a trade that Holly almost got stopped out in, but not quite, and sometimes even on a stop out is what we like to call a trade around. We started trading back in the ancient days in the 90s. We'd always see a guy in the office bitching about getting stopped out or almost getting stopped out. We'd take a look at it and go, well, looks good now. All right, we'd capitalize on that guy's pain. So this is the same thing, except it's not actually a human being, right? It's Holly. But we see this bottoming wick, and then this next candle start to form. Hey, think about this. We could get a better price than Holly, 1975 for Holly. If we watch this candle close with that bottoming wick and we thought the trade was still solid, we could get a better price than Holly and use a smaller stop out just outside that wick there. Okay, so keep that in mind. Not everything that you see when Holly is in a red position is necessarily a bad thing, right? The statistical probability is good for the day. It's just that sometimes, as with anything else, the timing is slightly off. So, 16 cents in between here and there for a unit. And let's take a look at BLD here. All right, this one, nice and easy. We get a signal from Holly right here, and this is one of the ones that takes a little bit of lift, but look, just ebbs and flows right at that entry line for most of the day before, like a lot of things, including our friend the SPY, got this nice little lift at the end of the day. All right, and if you're like me and a bunch of other people that were kind of sitting in some positions long, pretty much, as this little portion of the day unfolded, and we get this little wick right here, making everybody nervous, and then we get closed, and then boom. I got to say, this little push above with this volume kind of caught me off guard. I think it caught everybody a little off guard, but hey, for the bulls and what might happen tomorrow, not necessarily a bad thing. But a lot of things, I would take it, follow the SPY on that little journey there. So 20 cents in the spread there, 16 cents in the spread here, along with the couple that we saw through NEO and 2.0. That's about all the risk-on examples that we have today. But once again, also a good example of what we call a trade around, when we almost get stopped out and we close with this bottoming wick and a strong following candle. Sometimes those can be really good entries as well. All right, Steve, looks like you're doing a pretty good job at knocking those questions out. Do I need to address anything here before we move on? Man, I'll just assume that that is a negatory. Okay.
I think so.
All right. All right, ladies and gentlemen. So that's what we got for Holly today. But hey, we've all got our favorite windows, right? Depending on the type of trader that we are. Everybody that attends on the regulars know that I like the range breaks because of the simplicity of the pattern. And I also like to couple in some high volume metrics with those signals as well. We all know that volume is not the holy grail, but it can be the great equalizer when we see a nice tight setup. So I want to point out some good setups from two of my favorite windows here. One of them is just my good old-fashioned original high momentum ticker, which is turbo breaks up, which is where the majority of these came from today. But I also want to mention the fact that a variant of the original, which is turbo up family no resistance, meaning a lot of these, well, not a lot, but the stock has to be at all-time highs as it's coming through this version of it as well. And needless to say, that ticker has been somewhat dead for a good number of days, weeks here. However, we're starting to see things come back to life. Keeping in mind that the market, we're still quite a ways off from all-time highs, but the market has clearly bounced off the bottom here, and the upward momentum is continuing. So, the S&P, if we could reference that as the head of the snake that is the market, well, that's just 500 symbols, right? With over, well, we could just say somewhere between 7,000 and 8,000 tradable symbols every day. Everything gets pulled around by the S&P. But the fact that I'm starting to see stocks hit all-time highs again just tells me that there's a lot of action in the body right now. We got the tail down there, we got the head up top, only 500 stocks. Most of the stocks are contained in that body, right? So interesting action that's going on here. So first and foremost, let's take a look at the ones that were produced just from turbo breaks up. And before we do that, just want to sketch out the fact that I'm using new high on this alert with my filter complement. Now, the reason I'm using new high is because we've got all these great alerts for opening range breaks built into the system, 5, 10, 15, 30, and 60 minutes. But once we get past 60 minutes, well, you're kind of on your own. But the point being that a stock cannot break out unless it's hitting a high. Now, I'm going to have to pop back and forth between 5 and 15 on these candles, because the sooner that they come out, I start off the day watching 5-minute candles, because we have to have something to key off of. All right. So everybody's probably familiar with this stock, one of the little darlings in the cannabis business. TLRY certainly had some ups and downs. It's looking like it's kind of, becoming domesticated, so to speak. But one of the first signals I saw today was this TLRY. Keep in mind, we're looking at 5-minute candles here. What do we have? We had a little gap up. We had a run up, clearly buyers in the stock. And then what happens? We get this little consolidation area right here. As the high was put in, goes to sleep slightly underneath it. What's another way to interpret what's going on here other than a micro consolidation? Well, we could also say buyers and sellers have become equal for a time being, which is always indicative of a move. Now, we don't know if that's going to be to the up or the downside, but we just have to, basically take into account the action of the stock thus far. So right about here, and I just double click from the alert, you can see the arrow indicating the candle where the signal came as this new high was created, right? And this is textbook. This is what you want to see. The reason being is we had very little energy expenditure leading up to there. Nice little consolidation area. Why is that important? Because these little guys are going to help you define your risk. So if this is the entry candle, and since we're looking at 5-minute candles, I take the low of the prior 15 minutes, not including the entry candle, 5, 10, 15. This is our risk area right here. Now, we topped out up here, so this would be our reward area. Usually I take the time to put the words in here, just didn't have time today. So risk area, smaller than our reward area. Did the trade work? Well, yes, it did. Threw a little bit of a wiggle here, but hey, no stop out. We'd have to be nice and below here to get that stop. So TLRY worked nicely. Now, whether you got out somewhere in here, set the wiggle and hopes for more, doing your own version of risk on, that's up for up for debate, depending on your risk tolerance. But the bottom line is a good clean setup and a good move in our direction. Then we just have to figure out when to take profits. Circling back around to my comments earlier, based on my expectations about follow through. Well, we had a nice run. We had a pullback and we had higher highs again. But boy, if you got too greedy, it all went back to zero, right? But some good opportunity since the time of the entry. All right, next up. And while we're talking about these patterns, keep in mind, this ticker is very active. So a lot of times you'll get alerts up here, right? If we're seeing something like this, well, that's too far away from here. We missed it, right? So it's all about timing. Can you get it as close to the breakout bar as possible? And how's your prior 15-minute risk? As you can see, I've put the line in here. Here's the entry bar, prior 15-minute low right here. So once again, nice risk and a lot bigger reward area here. Once again, where you got out is up to you. It's getting the thing in motion. Do you have time to exit for a profit, or were you ever in the position to exit for a profit? Clearly, yes, here. And then it just becomes about managing that trade. Maybe taking half off, setting break even back to the other half. Everybody's a little bit different. But based on expectations today, it's never 100%, but holding for the continuation, you probably had to set a lot of wiggles back down to zero. Saw a lot of that in the Holly equity curves today too.
I'm sure you mentioned it already. Maybe I missed it, but the directional bias was definitely clear today. There was really only one side of the market that trades were working well, as far as Holly showing us the feedback that she gives us on a bigger picture value.
Absolutely, because how many shorts did we have over here? 4 total out of 32 trades, yeah. And that was pretty clear right off the bat. Absolutely. All right, so that was IMO. Of course, everybody's going to recognize this behemoth, Netflix. Netflix is, had some nice action as well, creeping back up to this little area of supply here. But on the intraday, Not the prettiest thing, but it's always good to show you a nice pristine charts. This one's not bad, it's just not quite as pretty as the others. And actually, I have mismarked my risk area here. Used to seeing my 15-minute candles. So this one, not even barely just over a 1-to-1. If we're using this as the entry candle as that high is penetrated, this little guy right here is the low of the prior 15 minutes. So my bad on that one. I marked this one too quickly. But when I adjust it properly, you can see barely just a little bit over a 1-for-1 on Netflix, right? Once you got into this one, though, you did have a nice lift right off the bat, assuming you took it right here and didn't, well, even the top of that candle wouldn't have been a bad entry. Plenty of time to make your decision on the exit as this thing did its sideways dance up at the top here. Now, Steve, you're talking about SNV earlier, but then this little guy came across my radar earlier as well, SLV, the Silver Trust. Once again, story remains the same. You know, we got these little haircut wicks up here, but a nice little tight consolidation nonetheless. And we get up here and crack it. We go sideways for about 5, 10, 15 minutes. Then we get a nice little lift here. Let's see what that guy finished at today. Yeah, low on that one, which is not out of the ordinary. But still, a nice little lift. Reasonable risk area right here. Reward area that's about twice as big. So, you know, these little patterns right here, I like to refer to them as the rabbits of the forest. It just depends on what condition the forest is in. There's always going to be a lot of these guys. It's just about timing, and are you picking the right ones? Are you being patient enough to wait for the quality? Critters. Yep, the woodland critters. These are the ones that that come along the most. Now, this next one, beat, right? Now, you're going to notice the pattern, the song remains the same, as the famous rock band says. And we have nice low risk here, 5, 10, 15 right here, a nice crisp entry here, even the top of that candle would have been choice, and a nice progression. But just like all the others, peeling off the top. Now, the reason that this one is just a little bit different, there were a lot coming through the no resistance, but the timing wasn't the best on these things today, with the exception of beat, right? Now, when we look at beat and we squish up the daily here, what do we see in here? Well, nice close today as well. This one might be one that you want to keep an eye on tomorrow. If we do get a nice setup today, just keep in mind, there's no obvious area of supply here. It is out of its box. It's at all-time highs. Doesn't necessarily mean it's going to have a 4 or 5 day run, but it could, all right? So might be one that you want to keep on the radar for tomorrow. If you see something nice on the intraday, nice and cuddly, might not be a bad trade to take.
Nice and cuddly.
Nice and cuddly. Would be trade. All right, and we are about 9 minutes away from the top of the hour. And I do believe that gets us through all my setups, all the Holly talk. So, seeing as how it is a test drive week and we've got a pretty hearty crowd in here, just going to open it up here for the last 5-6 minutes or so before we bring Scott in. See if anybody has any questions out there. If you're a test driver, go ahead and chime in. You don't have to be a test driver to chime in with a question, but just wanted to give a little bit of time here at the end of the webinar to see if there are any questions out there that we can knock out for you. Just cue up the Jeopardy music, Scott. And while we're waiting for a question to pop in, well, Steve, how's your Ipanema, girl from Ipanema? Been practicing that?
No, it's not good.
Well, you could play Bohemian Rhapsody.
Yeah, that's true. On the piano. I don't think my microphone reaches that far.
All right. Well, I don't see anybody just rushing in here. I don't see any questions flooding in. I'll take that as a good sign. All right. We did have one pop in from Randy. Okay. Can I make a T window that will show when a stock crosses the VWAP? Okay. Well, if you're talking about a T window, I just pulled one over here. Now, T windows can only use filters, right? So we can show you where it is in relation to VWAP, and based on the value that it's showing, you can pretty much deduce, hey, did it just cross or is it about to cross? So if I find the VWAP filter, click on distance from VWAP, and I just say show the column. Of course, keep in mind the market's closed. This is just looking at where these stocks were about a minute after the close. But seeing as how we can double click and sort by any of these guys, when the market is open, and let's say we're watching this stop list or whatever other one you created and you added this column, if we zero in on the zero values, then all of these stocks will be right at the VWAP. 1/10 of a percent above, it might have been sitting there for a while, or it may have just came from the bottom and got above, right? And then if you're looking for the ones that are just a hair under the VWAP that might be good candidates, well, that'd be these slightly negative values right here, 1/10 of 1%, 2/10 of 1%. So that's about the best we could do, showing you position related to VWAP when we're talking about a top list there.
Yes, Randy, same question, same question asker. You could use a window for this as well.
Yep.
You don't need to configure the column for VWAP. You could configure the column to keep out the noise, to only show you stuff a little bit above and a little bit below, like Jamie just showed you.
Right. If you didn't want to see things, more than 5/10 below, you could say, okay, only show me the ones that are 5/10 of 1% below or 5/10 of 1% above.
But you'll need to determine what your event is going to be. Is it going to be a new high? Is it going to be the stock running up, running down? You have to determine what that event will be to make the A window work correctly.
Right. So I could just leave this one as is, do the same thing, just pop the VWAP filter in there, so that as these things came out and they're hitting new highs, I can tell where they are in relation. So AME was only 0.6 of 1% above the VWAP as it took this little header north here. So a lot of the times we just have to plug in the metrics and then, hey, not the way I envisioned it, but it does the job, so I'm happy. All righty here. Yeah, Igal, basically we kind of covered Holly. I'll just give it the 2-minute overview here. Holly has 3 modules and is a statistically inclined system. So every signal that's delivered via Holly, why is it special? Because everything has statistical weight behind it. We can see right here what all the expected statistics were out of every strategy, but then we have real world performance based on what the market is doing. So in essence, we know that everything that Holly brings to us has statistical weight behind it. So, we have to come up with what kind of trader we are. Are we going to take every trade because we want to play the statistic model, or do we want to take the highly probable statistical entries and then weigh them against the chart and see if we like what's going on in the chart as a second way to vet the trade? But we're going to be talking more and more about the Holly trades as the week progresses. We've replaced all the TI universities with support webinars, so I guess that's a good time to talk about that. We highly encourage anybody, especially the new test drivers, to attend the 12 o'clock Eastern webinars for the rest of the week, and then the support session, which starts on Friday at 11 Eastern, so that you can come in there and ask questions in detail, and we can give you detailed answers. I'd like to go in more detail about Holly, but we're up against
it's funny you say that, because I dropped about a 15-minute video segment that only goes over the basics of the AI Holly. So whoever asked that question, venture into the chat window there on our GoToWebinar toolbar and just click into that YouTube link before we end the program, and you'll have a much more detailed explanation of what the AI Holly is and how to use it.
Yes, indeed. And I'll just say this in closing, Wayne. External linking keeps turning off after shutdown. That's correct. Every time you shut down trade ideas, the next day when you boot it back up and boot up your trading program, you do have to relink because it forgets everything. So that's the way that is functioning currently. All right, ladies and gentlemen, it looks like we're just about out of time. Once again, I want to thank everybody for showing up today. It should be an interesting remainder of the week. And Scott, if you're ready to walk us out, we're ready for you.
All right, sounds good. Why don't you go ahead and pull up the slides? There's a couple items on the way out. First, there's an ebook that's got some really relevant chapters this last year. We launched it about this time last year, so a lot of you may already have it, but if you don't, go to trade-ideas.com/ebook, put in your email address to get the download link. Jamie and Steve both contributed some chapters to it. It's got 5 strategies to help you win in the post-BTFD market, so don't miss out on that. And then we have a podcast. We just released a newish episode last Friday. We should have some more new ones coming up soon, as soon as this Friday, probably. As we've started season 3, just search for Trade Ideas Podcast wherever you listen to podcasts and add us as a subscription. You can listen to some episodes from the end of last year and get ready for the new ones that are coming out. The most recent one was one we put up with an interview between Sean McLaughlin and Kunal Desai, who is one of our referral partners, longtime Trade Ideas advocate, and it's got a lot of good stuff in it. We do have a test drive that's ongoing now, but don't worry if you missed signing up earlier. You can still sign up anytime between now and midnight February 6th on Wednesday and still have 5 trading days. For example, if you sign up on Wednesday evening, then your test drive is good through next Wednesday. So you still get 5 trading days, but we do recommend trying to get the most out of it this week when we have all the special webinars and support sessions, and everyone is ready to support the test drivers. To get into test drive, if you want to experience what premium is like, just go to trade-ideas.com/test drive and sign up. It's always popular. We do have a discount code that's good this month. You can use it for an upgrade or to start any subscription, and that's LOVETIAI, all caps, and that'll be good through the end of February. It saves 15% off the first month or year of any subscription with Trade Ideas, and if you're doing an upgrade, same deal. Any questions, email us, info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We've also got @Trade Ideas. Facebook.com/Trade Ideas Pro is our page on Facebook to like, so you can share our updates with your friends. Again, questions, direct those to info@trade-ideas.com. That goes into our help desk software and goes to our support team, and you can get the fast help that you need. Thanks, Jamie and Steve, and thanks everyone for attending and all the test drivers, and we'll have a recording up later on tonight or tomorrow morning. Later.
All right. See you tomorrow.
Yep. Thanks, everybody. Bye-bye.
Bye.